Good morning and welcome to the ADS Securities Markets Update. We'll start today with a review of yesterday's developments in Europe, the UK and even in the US, in addition to the Asian session today, before previewing the upcoming sessions today. First of all, let's start with the UK inflation data. First of all, the year-over-year CPI tumbled to a record low yesterday, or in January, toward 0.3% in January, down from 0.5%, which is as estimated. However, the month-over-month CPI, it also tumbled by the most since 2001, declining by 0.9% in the month of January as well. However, the year-over-year core CPI, which basically ticked higher again, or as expected, toward 1.4%, up from 1.3%, and this is basically during the same period of January comparing to December, which is the second monthly increase in a row and the highest reading since October of last year. And this, or the increase in the core CPI, shows that the decline in the year-over-year CPI is basically driven by the energy prices, which stabilized recently. And this is why the impact on the British pound also was positive. However, the positive impact also was limited, and as we noted yesterday, or in our report yesterday, that we were looking to short the cable or a sterling dollar between or below 1.5390 and 1.5402. Basically, the pair first of all touched these levels, or the first level at 1.5390 and then 1.5402, and also increased toward rose toward 1.5403 before declining back toward our target, which basically was 153.40, and continued the downside move toward 1.5315. In short, basically we sold the highs or yesterday's highs and also booked more than 80 pips in both trades. As for the European figures yesterday, is also in Germany, or first of all in Germany, we saw the German ZEW economic sentiment also, which increased less than expected, rising toward 53 in February, up from almost 48.4 in January, while the estimates also were to rise toward 55.4. However, this is the fourth monthly increase in a row and the highest reading since February of last year. Going forward also to the Eurozone, or the ZEW index for the Eurozone. For the Eurozone economic sentiment, it came in also much better than expected, rising toward 52.7 in February, up from 45.2, while it had been anticipated also to rise toward 51.3 only. However, this is the fourth monthly increase in a row and the highest reading since June of last year, and this is also what kept the euro stabilizing across this session. During the day, or during yesterday's session, or especially during the US, some European officials noted that a Eurogroup is ready to work with Greece to find a solution in the next few days. However, the Prime Minister of the Greek Prime Minister also noted that they are not in a hurry to deal with the creditors, while some of the Greek officials noted yesterday that Greece might ask for an extension, or for a 6-month extension, later today. And this is why the European equities closed yesterday's higher across the session, or across the day, except the DAX index, which also lost a run only by 27 points. However, also the euro continued to rise again from yesterday's low, which basically 1.23 to above 1.14, reaching as high 1.1450. As for the US figures yesterday also, and as we noted in our previous reports, the economic releases came in with another disappointment. And first of all, the Empire State Manufacturing Index declined more than expected, towards 7.8 in February, down from 10 in January, while the estimates, or it had been anticipated, to decline toward 8.9 only. And the unemployment index also fell in February, but most importantly, the future the business conditions also index plunged to the most in 6 years. Moreover, the NAHB housing market index also unexpectedly fell further toward 55, or it was expected to rise toward 58, up from 57. However, the index unexpectedly fell toward 55, which is the lowest reading since October of last year, and also this is the second monthly decline in a row. As for the Asian session today, there were no economic releases from any of Australia or New Zealand or even China. However, all eyes was on the Bank of Japan, which came in also unchanged. However, the bank upgrades its outlook again toward the industrial production, but at the same time they downgrades the inflation outlook further, with no hints of more QE anytime soon. And this is why the dollar yen lost again some of its gains during the intraday or during the session today, especially in the morning hours, declining from the session high, or basically it was 1935, back toward 1888 this morning. As for the European session ahead, we will be focusing on a collection of economic releases and events from the UK today, and eyes will be first of all on the Bank of England meeting minutes, in addition to the jobs report in the UK. But beginning with Bank of England, the votes are likely to remain unchanged, and the Bank of England is likely to vote in favour to keep the current interest rates unchanged, in addition also to the purchases facility. And however, we believe that the bank may downgrade its tone again regarding a possible rate hike later this year, given the fact for the continuous decline in inflation figures so far. As for the jobs report, the estimates are stable somehow. We will, or the market is looking basically for a stabilization in unemployment rate at 5.8% for the month of January, in addition to a stabilization or another stabilization at 1.7% for the average earning index. And finally, the claimant count change is expected to decline by 25.2 thousand for the month of January, comparing to a decline of also 29.7 thousand in December of last year. Going forward to the US session today, there are many economic releases and events also which likely to be the most, or which likely to have the biggest impact on the markets today. Basically, we will be waiting for building permits, PPI, core PPI. We will be waiting also for the housing starts, industrial production, and the capacity utilization rate. Most of these figures are expected to be slightly higher than the prior month. However, the PPI is expected to be also weaker again. However, despite all these news, all eyes will be on the FOMC meeting minutes tonight at 19 GMT time, and we believe that there will be also no big change in this meeting. However, the tone is likely to be downgrade, or if the Federal Reserve downgrades the tone regarding any rate hike this year, it won't be surprising, especially after the disappointment of economic releases since the end of the tapering in October. Finally, we will look just only for the gold prices yesterday. It fell down yesterday sharply by more than almost like $20, reaching as low as at 1208 to 1204. However, so far we're still trading within an uptrend, or a short-term uptrend, since the end of last year, since November's low toward also January's high. However, right now we break below 50%, moving the 50% retracement, which was around like 1219, and declined toward also yesterday's low, which is around 1204. But 61.8% stands at 1199, which is likely to hold in the next few days. And if gold breaks below that level at that time, we might see more and more decline toward 100 or 1180. This is it for today. You can follow us on our social media sites, Twitter, Facebook, and YouTube, to get the latest economic releases, reports, and analysis. I'll see you once again tomorrow. Thank you for watching.